Hello, welcome to the King's Hall. If you are just joining us for the first time, kindly like, comment, share this video, okay? So today we want to look at a very interesting topic in accounting, which is called adjustment of final account. Very important in the sense that there are many accounts you might be stagnated if you don't know adjustment, okay? Now, the adjustment simply means those items under additional information that appeared after the trial balance must have been prepared. Okay, so we have to do some little adjustment so that it can reflect in the final accounts. Okay, if you're not conversant with this, to solve trading profit or loss accounts will be a problem. Manufacturing account, partnership account, there are various accounts that if you're not conversant with this, you'll find it difficult to. Okay, so the first item, if you notice in some question, whenever you're given a question, they will tell you additional information. Now you see items under it. Okay, that is what we call the items we are about to adjust. Whereby they will tell you salary is unpaid, or salary is owing, or income was prepaid. Those items are adjustment. So that is what we want to treat or look at how it is being treated. So the first thing we should look at is adjustment. It's a method of calculating or treating item that appears under the additional information. Okay. So the first item that appears under additional information most time is always the closing stock or inventory. Okay, now before we continue, notice that every item that appears under additional information, anything that appears under additional information, appears 2 times whenever you're preparing your trading profit or loss and balance sheet. Okay, it appears twice. It will appear twice. So whenever you're preparing that, take cognizance of that. Okay, so the first item that is mostly shown is the closing stock or the closing inventory. Okay, this one doesn't need much adjustment. What they want you to do, that the 2 accounts that it is mostly affected or where you post it, the first one is the trading account, where you deduct the cost of goods, deducted from the cost of goods available for sales, while the other one is under the current assets. Current assets in balance sheet. Okay, that is 2 parts we post the closing stock or inventory. The first one is trading account. You deduct it from cost of goods available for sale to get your cost of goods sold. While the other one, you post it, that same value, you post it in the current asset in the balance sheet. Okay, another one that is also very important is our expenses. Whenever we have expenses, and these expenses can come in 2 forms. It is accrued. Now, accrued means owing. It still means due. It still means unpaid. It still means outstanding. So, which other word they want to use? Okay. So, expenses, accrued, owing, due, unpaid, outstanding. Now, whenever they said an expenses is unpaid, for instance, salaries unpaid, it means that, and it's an expenses, it means that these are events in which the services have been enjoyed, but payment have not been made. Services have been enjoyed, but payment have not been made. For instance, if your rentage where you're staying, for instance, for this particular year, you've stayed for last year, and up till this year, you've not paid rentage for last year. We call that accrued expenses. Why? Because you have enjoyed the service of staying in that apartment, but you have not paid for that apartment. It means you are owing. Okay? You are owing, or it is unpaid. So, whenever an expenses is accrued, owing, due, unpaid, or outstanding. Whichever word they want to use, it means what? The same thing. Now, one thing I tell students most time is that you should identify, break the word into syllable. For instance, you have salary. They say salary owed. I tell students most time, break them in syllable. Now, if you break them this, identify what is this. Salary is an expenses. Owed is same thing as accrued. It means this is accrued expenses. Now, what do you do to accrued expenses? How do you adjust it? Now, you add the amount that is shown under the additional information to the amount shown in the trial balance. Okay? For instance, if we have something like this, let's say this is our trial balance. It said salary, salary on the expenses. So this is salary is let's say 10,000. Okay, and they said additional information after that. It's a salary owed or accrued, depending on the statement, or unpaid, depending on what we have here. Said is let's say 500. Okay, 5,000. Okay, salary owed 5,000. Now the adjustment will be that you add up this 5,000 with the one that's what they've paid for. Okay, so it will be to adjust now the salary amount paid, the amount paid, that is 10,000, the amount in the trial balance, that is it, add owed or owing, which is what? 5,000. So you add it together, 10 plus 5,000 is what? 15,000. Okay, so this 15,000 now is what will go to the profit or loss account. Okay, this is what will go to profit or loss account. While the owing that was in the additional information is what will go to what? The balance sheet. And it will go to the balance sheet under the current liability as what? An accrued expenses. Okay, so that is what you do to accrued or owing. You add it up to the one that is what? In the what? Trial balance. You add it up. For all accrued, you add it up. Okay, so what says is what? Accrued expenses. You said you add it up to the expenses they've paid what? In the what? Trial balance. Okay, while the one under the additional information goes to the balance sheet, the one that was added goes to the what? Profit or loss account in the expenses side. Okay, so that is the first one. So we said this amount now will go to the profit or loss as expenses, while also the debits, the one under the additional information, will go to the balance sheet as current liability. Okay, so that is the first one for the expenses. Okay, now the same way we also have prepaid or advance or prepayment. Okay, so we also have prepaid expenses. Now, prepaid expenses are expenses in which the payment has been made before enjoying the what? Services. Okay, payment has been made for which the services have not been enjoyed. For instance, if you paid for next year in your house rent, it means that you are paying in advance of what? Enjoying the service. We've not gone into next year, but you have paid for next year. So what do we do in this situation? Now, whenever it is what? Prepaid expenses. As I've said earlier on, what do you do in this aspect now? You have to include this. Now, in this aspect now, you also have to what? To divide it into syllable. For instance, they said rent prepaid. Rent prepaid. So once you divide it, what is rent? Rent is an expenses. Prepaid is same thing as what? Advance or payment in advance. So it means what? Prepaid expenses. Now how do we take prepaid expenses? Now you deduct the amount that was prepaid from the amount that have actually been what? Paid. In prepaid you deduct, but in accrued you add up to the one in the trial balance. But for prepaid, you deduct it from the one in the what? In the trial balance. Okay? Because the one in the trial balance, we want to know what is the exact money that is supposed to be for this particular year, so that it will go to the what? Profit or loss account. Okay? So what do we do? Let's say for instance, we have rent here also. Rent here, let's say we have rent here 20,000. Okay? And in the additional information, they said prepaid rent is 2,000. Now what it means is that out of this 20,000, 2,000, okay, so what do we do? The 20,000, to adjust it now, the adjustment proper, we say the rent is what? The amount that is paid in the trial balance is what? 20,000. So what do? You less prepaid. You less prepaid. What's the prepaid? 2,000. So I have 2,000. So 20,000 minus 2,000 is what? 18,000. 18,000. So this 18,000 now is what we go to the profit or loss account as the expenses. Why the 2,000? Remember I said all the ones in the additional information is what go to the balance sheet. Why this 2,000 is what will move to what? Balance sheet. And where will it be under balance sheet? It will be under the current asset. Why? Because this money is still valid. Why? Because the right of usage for this money has not come. Okay? So it will go under the what? The current asset. Okay? So it's the same thing like this. It's the same thing as saying in the prepayment, the amount goes to profit or loss, the one that was calculated in the expenses side, while the other one in the additional information goes to the balance sheet under current asset. Okay? Remember, we said for the accrued, we add it up, while for the prepaid, we less it from the one in the trial balance. Okay? Now let's see another aspect of this. Let's see another aspect of this also. Now we have seen for expenses, it may either be accrued or prepaid. All expenses that falls either accrued or prepaid, this is how you treat it. I said it, you split it, identify if it is expenses, if it's accrued or prepaid, you treat it the way we've done it. Okay? So another one is income. Income. And also income can be accrued, owing, due, like that. And what is accrued income? Now accrued income is an income in which your services you rendered it, okay, which you yourself have rendered the services, but you have not received money in that regard. Okay, it means that your services have been rendered. For instance, you work in an organization and it is month end and going to 2 months. Okay, you've rendered your services, but you have not received income in that regard. It is called accrued income. Okay, so what do we do to accrued income? You check the income in the trial balance if it is there. Now, once the one in the additional information, you add it together. What I would say, for instance, if we have a trial balance and they said, for instance, commission received. Commission received. Commission received is an income. Now, let's say the income is 5,000, and in the additional information, they said commission received owing 3,000. Now, what does this mean? Now, how do we adjust this? Now, your adjustment will be now, you said commission, the amount that was paid, the amount that was received. The amount that was received is 5,000. Now you add the one that was owing, 3,000. 5,000 plus 3,000 will give us what? 8,000. Okay, so it is this 8,000 that will go to profit or loss account as income, not as expenses like the previous. As income in the credit side, while this 3,000 under additional information, that is what will go to balance sheet as current assets. Okay, it's what will go to balance sheet as current asset. So the commission received now, or any accrued income now will be, the first one, it will not be that the amount that was calculated will go to the income side in the profit or loss, while the one in the additional information will go to what? The balance sheet under where? The current asset. Why? Because you rendered the services but the income has not come, so it is an asset to you. Okay, so that is how we treat what? Accrued income. And I've said it earlier on. How do you identify this? You split them into syllable. What you split them? The one on the left hand side, what is it at the expenses or an income? The one at the credits at the right hand side, is it accrued or prepaid? Okay, so another one is prepaid. Another one is prepaid or payment in advance or prepayment. Okay, so prepaid income. What is prepaid income? Now, prepaid income is the income you receive in advance of your services to be rendered. For instance, if you work in an organization and you've been paid or you've collected commission 3 months from now, it means that you've received income in advance of the services. That means you've not rendered the services, but you have received income for that. How do you treat this? If you have, you will see this in a question. And what do you do? Since it is prepaid income, okay, you less the one that was prepaid from the one in the what? Trial balance. As simple as that. Remember we said for all accrued, you add them up to the one in the trial balance. For all prepaid, you less them from the one in the trial balance. Okay, so in this situation now, if we have, let's say, a trial balance and that same commission received, for instance, let's say it is 5,000, and they say the additional information, the prepaid commission or the paid commission in advance, let's say 4,000. Okay, and what does it mean? Now, how do we treat this? In our adjustment, we said commission, the amount that was received is 5,000. So what do we do? We now say less prepaid. What is prepaid? 4,000. Okay, 5,000 minus 4,000 will give us 1,000. So this 1,000 is what will go to profit or loss as income. This is the amount that is due for that present time. This 4,000 is for subsequent period. Okay, so this amount will go to profit or loss as income, while the 4,000 under additional information will go to the balance sheet as current liability. Why? Because the time to what? To earn that money has not come. It's not a time. Okay? So, to represent that here, now we say for the prepaid, we said the amount that was calculated will go to the profit or loss as income after you've deducted it. While the one in the additional information will go to balance sheet under current liability. Okay, so that is how to treat this. Now, in summary, let's see that summary now for our expenses. Okay, let's say, for instance, accrued expenses. Now, for accrued expenses, what do we do? You add to the one in the trial balance and post the totals to the what? To the profit or loss account in the expenses as expenses. Why the one in balance sheet? What do you do? For accrued expenses, the one you post to balance sheet is the one under additional information. Okay, so the one under additional information will be posted to the current liability. Okay, so the same thing if we have prepaid expenses. Now for prepaid expenses, you less it from the one in the trial balance. Okay, so if you less it from the one in the trial balance, the totals, you post it to what? Profit or loss. You post it to the what? Profit or loss as what? Expenses. Then in the balance sheet, the one under additional information is what is going to the balance sheet. It will be under our current assets. Okay. Also, for accrued income. For accrued income, since it is accrued, we add it to the one in the trial balance if it is there. Okay? You add it and post it to the profit or loss account in the credit side as income. It's an income. Okay? While in the balance sheet, the one under additional information, that is what will go to balance sheet, it will be under our current asset. Because accrued income is a current asset. Okay, while the last one, prepaid expenses. The prepaid expenses, prepaid income, sorry. Prepaid income, what do? We less it from the one in our trial balance. Okay, once you less from the one in trial balance, you post to the balance sheet the one under additional information to current liability. Okay, so see, look at it. That is how it is being treated. The ones say are the ones under additional information. Why all these ones you add or less, you add or what? Or less. Okay? So that is how we treat this. If you don't know this or you can't do this, it will be very difficult to prepare final accounts of a sole trader, manufacturing or partnership. Okay? Or company accounts. Okay? So this is what we look at how we treat it. It's posted to the trading account and the current assets in the sheet. Our expenses are accrued or prepaid, and our income are accrued or what? Prepaid. Okay? So this is what we'll see. That's part A. In the next video for part B, we'll look at bad debt, how to treat bad debts in adjustment, provision for bad debt, provision for discount allowed and debtors, provision for discount received. How do we treat all this? Depreciation. How do we treat all this? Okay? So watch for that video. Now, if you're just joining us, ensure you click on the subscribe button, like, comment, and share. Comment below, put in the comment section. Let me know what you feel about this video. Which one do you want me to treat? Okay, stay tuned.